Hey everyone, we have Mission 35 Mortgages with us, Brian and Chelsea. We just wanted to, get a feel. What's happening? What happened today? So,
Oh, well, I woke up, I had a coffee, had a nice long walk, and then the Bank of Canada raised rates 0.5%. So,
I know.
but in all seriousness, you know what? 0.5%,
Hmm.
market was kind of forecasting a half a point to three quarters. So it was on the lower side, which is nice.
Hmm.
And we're hoping that we're getting close to the end here. So,
Yeah.
but a half point, it means, what does it mean for people? It means, almost 25 to 30 bucks increase per 100,000 if you're on a variable rate mortgage right now.
Okay. Okay. And what recommendations do you have for buyers right now? You think it's still a good time to buy? What are your thoughts?
I always think it's a good time to buy. Well, just because you know what, the market's softening. There's a lot of uncertainty in the marketplace right now. Even
Hmm.
though it's harder to qualify because now you have to qualify at a higher rate as well too, right?
What is
So
that qualifying right now? What does that look like with the new rate hike?
I would say a range between like 7 to 7.5.
Okay.
yeah, so what I would say is if anybody's out there shopping right now for and you're pre-approved, make sure you reach out to your mortgage agent again or your banker. Make sure your pre-approval still stands because you want to make sure that you're still qualified under the stress test. So
Mm.
because now that
Hmm.
that variable rate's going up, your pre-approval needs to go up as well too.
Hmm. And what about for like current homeowners? Do you have like any recommendations? Like, are there anything like
Yeah,
what
I
would you
think
say for them?
you know what? Grab a bottle of wine, open it up
Yeah.
for it tonight, you know.
Yeah.
But if you're a current homeowner, I think this isn't a new conversation for a lot of people that are in variable rates. I know we don't love it, but it's something that I
Mhm.
think people have been made aware of over the past 6 months. The current homeowners that I would really like to advise is people that are in a fixed rate. I know Chelsea's reached out to a bunch of her clients that are in a fixed rate mortgage because you see all this happening, but it hasn't really affected you yet. Right. And if your
Mm.
mortgage is actually coming up for maturity in the next like 6 to 12 months and you're sitting at a
Like
2%,
three, yeah, 2 or 3.
yeah, sitting at a
Wow.
2 or 3% mortgage, you'll be maturing at maybe 5.5 or 6.5. And that could
Mm.
be literally $1,000 to $1,300 more a month, depending on what your balance is. So it's just,
Huge
it,
difference. Yeah.
yeah, and it's just like if you start to plan for it now, you can do a better job than just being shy. I had a manager that showed me this. He said if you're going to get in a car crash and a head-on collision,
Hmm.
it's easier to turn here than it is to turn here. Right?
Yeah.
So,
Yeah.
you know,
Preparation and also just having the conversation, I think starting somewhere, right? And seeing
yeah.
what that looks like, for them. So, and then is there any other recommendation like you'd recommend for just everyone in the marketplace right now? I think, I don't know. I feel like we can't change it.
Nope.
So, I
Nope.
think it's always starting with a conversation and looking at the goals and then working from there. And how can we
Yeah.
make this happen? Right. There's
Yeah.
always where there's a will, there's a way. Right.
I agree. And I think you start with payment. Don't start with interest rate, start with payment, right? And I think it goes back to how much can you afford? It's a pretty simple question, right? It's not
Mm-hmm.
like we don't start a conversation with what interest rate do you want to pay? Because it would always be one, right? Or zero.
Yeah.
It's
Nothing. Yeah.
what can you afford? What's your budget? And I think it's bringing back if you're shopping for a home and you say, I can afford $4,000 a month. Great. What does
Mm-hmm.
that look like? And you sort of reverse engineer it, right? So, and I think just for everybody to remember what goes up goes down, what goes down goes up.
Mm-hmm.
And I always say in a bad market, you're one day closer to a good market. So it's just one day closer to a good
Positive.
market.
I
Well,
love that. I
it's
love
going to
that.
happen, right? It's
Yeah.
just, it may not be for a little bit. And I think if you're
Mm-hmm.
sitting on the sidelines now, the challenge is when everybody thinks it's a good market again, everybody's going to be buying again and investing again, and then you'll be in competition again, and it'll be
I
a,
know.
a challenging time, right? So focus
Mm-hmm.
on your payment, focus on your budget. Don't take
Mm-hmm.
more on your plate from the buffet than you can eat, right?
Yeah,
And just buy what you can afford. I think
for
it's
sure.
sage advice for the past 10 years, 20 years.
Yeah, I
So
know. And for anyone listening, like everybody's situation is going to be unique, but we all would be happy to sit down and chat about the goals and all that. You have to start somewhere. So,
yeah,
yeah.
totally.
Thank you so much. You guys provide insane service all the time. So, thank you, thank you, thank you. And I just love it. So, thanks for your time
Thanks,
today.
Ian. Thanks for everything.
All right.
Okay.
Bye.
Take care.